You've preached a lot today. Can we get to trading, please? No. In fact, my time is up, and it was nice seeing you, and have a great rest of your day. I'm just kidding. I went through some charts. I would encourage you to rewind a little bit, watch back. But yes, I did a lot of preaching today, and if you didn't like it, then I'm sorry, and I still love you. Anyways, we're going to take a quick break. Before we do, just a reminder, guys, if you want to try out the Edge Finder, it's free this week till Monday. We're doing a Edge Finder free week event. All you have to do to get access is click this link. And in all seriousness, for more analysis, stay tuned. I'm going to do some more research on the Trump stuff here, and I'm going to put out a video this afternoon. So I'm about to go do that, but you're in good hands. We got a serious heavy hitter taking over the stream. It's Chris Pulver, and he is coming in just after this quick break. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome back to some live trading today. We are sitting here 522.01 on the QQQ, flat on the day. SPY slightly up on the day. We got some interesting gaps here. This market has ripped pretty darn hard to the upside since the lows on the 13th of January. And I'm looking at some pretty impressive gaps. So we are not quite there filling the gap today, but it's going to be pretty darn close. And I wonder, are we going to kind of slowly pull back into fill today's gap and then offer some support? I am liking some trades that give me some flexibility and wiggle room to let price fall but still make money. That's kind of where my head is at. I honestly over the weekend consumed some pretty interesting podcasts, and I thought, you know what, maybe this market is now, since it's official, Trump is president, maybe that like first burst of optimism is still going to hit the markets. But we are, I don't know, we're seeing like very typical Trump action, which is every day there's going to be something from Trump, every single day. And if you think that's not the case, then you didn't remember 2016. So it's already on the calendar for what, tomorrow or Thursday. So we've got him speaking at the World Economic Forum. Hyperbole, superlatives. Let's see what he's going to say. You're going to have tweets every single day. I mean, Elon Musk couldn't be any closer, other than being an actual like cabinet member or in the executive branch. But anyway, it's going to be pretty nuts. I don't know what's going to happen, for better for worse. But let's take a look at the main things, right? I mean, this market has clawed back in a pretty nice way. I was thinking that this is still kind of a bull trap situation where even if this market does go higher, okay, I'm not really buying like big momentum bursts to the upside. I could see this market, getting back towards the highs, but struggling to hit those highs, or struggling to get there. And we still have a FOMC resistance point that the market can't break. And we're right there. So the trades that I'm looking at right now are taking in, those income trades we've talked about a lot the last few weeks, where I'm doing like a 1-1-1 trade, or sometimes I'll do a 1-1-1-1, which is basically it's a bear put spread and a bull put spread, and I have a profit trap in the middle. I take the trade for a net credit. I like that trade a lot. If I want to own the underline, I'll still be willing to own the underline if price were to fall a bunch. We are seeing a decent rotation out of Mag 7, and there's a nice little market breadth that's happening right now. If we take a look at the advanced decline line, right now we have about 70% of stocks advancing, right? Which, again, rotating out of the top 10 and rotating elsewhere. We look at the sector performance so far. I know it's only a few weeks into trading, right? It feels like it's the first week of trading, but we've already had 2 full weeks of trading. But now Trump is officially president. So we have 10 out of 11, 10 out of 11 sectors. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. So 10 out of 11 sectors green on the year so far. And the big run has come out of not necessarily big traditional leaders in the markets. So energy making the big run this year, outpacing the S&P quite a bit, out of the gates almost 10%. Financials up a decent amount. And then we come into industrials and materials and utilities. Now, I'm not exactly sure, what holdings I'd want to have some exposure to. You look at some of the familiar names in the face. If you go to industrials, you're looking at GE Aerospace, you're looking at Caterpillar, RTX, Honeywell, Union Pacific. So, Uber's in industrial holdings. That's interesting. I do have a 1-1-1 trade on Uber, or ratio spread on Uber, which I'll take a look at here in just a moment. So that seems like completely out of place for that stock. I mean, you're talking like Boeing, like only airplane maker in the game. It's essentially government subsidy. Union Pacific, you like railroads. There you go. Honeywell is, kind of a household name in the space. RTX, Caterpillar, always with construction, global growth. GE Aerospace, which they switched. That was a break off. So you've got GE Aerospace and GE Healthcare, which is GEH. Those are split off. So if you want to trade stocks individually, you can look at kind of the bigger indexes, look for some liquidity. But so far out of the gates this year, we have some pretty big names. Uber's already up 11.64%. We got the other ones up, 4, 6, and 9% respectively. So why is industrials leading? Stocks like that. Let's take a look at materials. Okay, look at your weights. Why is Lind PLC 21% weight of material holdings? It's already up 4% for the year. That's a massive holding, though. I would look at the stock, but it's a $418 position. I don't know if I love that much. Sherwin-Williams, Air Products and Chemicals, Ecolab. Now, would I trade these? I suppose I would trade these if materials like Freeport McMoran is copper and gold. All right. I think gold is a pretty decent play. Copper is a pretty decent play. There's some resiliency there. There's some bullishness there. But I would have to dig deeper fundamentally in the other ones. Like, are they going to benefit from, AI infrastructure? Are they going to benefit from any type of energy infrastructure, any type of energy reform? Maybe, I don't know. If they don't, then these would probably be stocks I wouldn't necessarily want to have. You can always have exposure to just the sector, because if any of these stocks go insane to the upside or insane to the downside, the sector would reduce the volatility because we do have weighting here. But also, if something performs very well, then we could see that also, lift the sector as a whole. Okay, and then lastly, we'll look at utilities. Again, large weights, Next Era 12.06%, Constellation Energy 8.2. Look at this. Okay, your biggest holding as far as the weight of the utilities sector is down for the year, while Constellation at 8% is up 41% for the year already. Why is that? There was some partnership with Constellation Energy, and I don't know if it was a mega cap of a Mag 7 or Nvidia. I'm not really sure, but I want to say I've seen Constellation Energy Corp in some headlines with some type of AI infrastructure play. But that's part of the reason like utilities is up 4.16% is probably because this stock is up 41% for the year. Okay, Vistra Corp up 23, almost 24% for the year. We had some pretty big movers out of energy. But again, this is going to be conservative, lackluster, lower volatility than just trading the stocks. Now, people can pick their poison. If you want to be higher volatility, higher risk, then you can be a stock picker. I'm personally not in love with being a stock picker. If I want to eliminate volatility or reduce volatility, it is better for me to play sectors, better for me to play indexes. And that's what I'm doing a lot this year. Okay. All right. So we're trading at 600. We're up about 0.47 on the SPY. We're up 0.18 on the Nasdaq. The Dow's up 0.71. Look at that comeback on the DIA. Good stuff there. Russell also making a nice little comeback. Now that we have taken out this recent high, we are pulling back into this kind of big FOMC candle pocket. So could we see upside here? Any type of pullback is, kind of buy the dip on small caps. I'm not sure if anybody is tracking Nancy Pelosi, but she did buy some. I think TEM was the ticker that popped up today. Tempest AI. and we're showing 35 to 46. It's already up 11 bucks. You'd have to follow like a quiver quant. I've got unusual whales here. I can see if I can find the flows, see if I can find some flow data. So let's go dark pool whales, insider trades. There's something in here. Let's see, option chain seasonality analyst ratings. I think I'm just going to go to whale feed and see if I can find a ticker for TEM. So you got intermarket sweeps going on. These are all buy levels. I mean, these premiums are pretty solid. So these all happened this morning. That's kind of crazy. I mean, this is a lot of money getting thrown in to TEM. I mean, look, the stock's already up. But I'm curious right now. Let me look at it fundamentally. So TEM. Where is it? Tempest AI. All right. So, everyone loves Nancy Pelosi because she is making money hand over fist since COVID. But fundamentally for the stock, I mean, okay, you've got forecasts to grow. Price is going to rally. That's good. Major insider selling. Okay. Currently unprofitable, not forecasted to be profitable. Okay. And then volatile share price. That's enough for me to say, outside of maybe an inexpensive ratio spread or something for credit, I probably wouldn't touch this thing at all. And I don't know what the premiums are. I don't know if it's optionable. I have very little history on it. This goes back to June of 2024. I mean, that doesn't get me excited about this stock at all. But I'll take a look at it. Are there options on it? Let's find out. So TEM, Tempest AI, trade it. We do have some expirations. If I wanted to have, we're trading at a 97.1 IV rank, which is good. That should be decent for selling some premium. Could I do something back here in the low 30s? Let's find out. If I went out 60 days to March, I could do this little guy for 30 bucks. Really? Let's try this. I could do that trade. I could do that trade for $125. And again, oh, this isn't even liquid, man. So I've got a bid price at 220, $1.10. If I got $1 out of this, I'd be willing to take the trade. So probability of profits around 77%. The ownership price would be 30. I'd have to be willing to take ownership here. It's about a 12% chance of assignment. But I wouldn't really take this trade for less than $1. Let me see if there's another way to do it. Nope. I don't like the 1-1-1 style here either. It's a debit on that trade. Unless I did this. 2 cents credit. Nope. All right, never mind. I don't know. The other way would be like just to establish a synthetic position. If I wanted to buy, a deep in the money call, and then sell against it and create a diagonal spread, maybe that's one option. I just feel like the option prices are not going to be that great. So I'll just let Nancy Pelosi have this one. I don't care. I'm not going to buy the stock. I'm not throwing money at it. I don't like the ratio spread. It doesn't give me anything that I want unless I can get a buck for it. Like I said, that's the only trade I'd be willing to do is if I did a buy the 35, sell the 30 for, I mean, this is a little bit better, but now I've got to be willing to take on 300 shares, which isn't the end of the world. 300 shares at 30 bucks. It would be a break even of Simon at 30 minus 5 minus $1.50, let's say. I mean, I'd own the shares at $23.50. So there's an income trade. So I get 150 bucks on the trade. It would tie up if I go to a IRA account that's going to tie up about 10 grand. So worst case would be a cash account. Let me go, not that one, this one. Yeah, 5,800 bucks would be my tie up. If I did a portfolio margin account, it's going to be a lot less than that. That tie up about $1,300. So would I like this trade enough to take it? Probability of profit around 82%. Chance of assignment around 12%. It's not bad. Okay. I don't like it that much. I mean, obviously, I'm going to be annoyed if this thing just goes straight up, and I'm like, well, that would be an easy 150 bucks, you know. Um, but I'll pass on it. Whatever. I'm not going to chase, man. That is like total FOMO. And oh my God, Nancy Pelosi. It's like I don't care. I don't care. All right, let's go back to the top down. So equal weight doing better. I have equal weight RSP. I have QQQE. All these are looking pretty darn good. My dollar cost averaging's faring nicely. Russell again back above 225. I'm getting it called away in March if that's the case, which will be fine. I also have some income trades on IWM that I put into the Pulver alerts. Russell VIX is down to 15 and change. We'll see what happens on the VIX. If the VIX comes down into the low teens, then I might look at a long play for the quarter. If we just stay here right around like 15, but we're kind of chopping around between 15 and 20, just expect some volatility. That's all. SVXY. Could I do it? Let me try this trade here. SVXY. This one might not be a bad play. 29.6 is a little bit higher IV rank than the indexes. If I went out to March, let's see what this one looks like. If I buy, sell, and would I be willing to take on some shares? Chance of assignment here is about 9%. It's a good chance of profit. So I could get $100 income on this one, take on some shares. Buying power is not awesome though. Let me clear this one out. So if I buy that put, let me go to 40 cents. Again, that's if I get my 55 bucks. I'd probably do 2 contracts here. So there's a 98% chance of profit, which is pretty good. I've got a profit trap. Max profit of 310. I'm not sure how that's oh, okay. So I've got $200 here plus the credit. Okay. That's not bad. So I get 110 bucks on credit. My max profit would be 310. Buying power is a little pricey though. So I'm not in love with that trade, especially for a portfolio margin account. That's real expensive. I mean, it's a high probability profit, but that's a lot of money to tie up for $100 and some profit. I mean, most likely this is a $110 winner over the next 59 days, but it's going to tie up $8,000 to do that. That would tie up probably double or triple that for an IRA account. So let me check that. IRA account right here. Same amount? Really? Same amount. That's crazy. Portfolio margin, same amount. Interesting. Possibly just no margin, higher. Yeah. Hard to borrow. Is it less liquid? Got some, I mean, we got some open interest down there at the $40 strike. All right. I don't mind this trade. 2 contracts, 100 bucks. I don't love that it ties up that much capital though. Probably not going to do this on IRA accounts. How much do I like this trade? Good question. Yeah, I mean, tying up 12 grand on 3 contracts, that's a lot. Okay, I'm going to take this trade for 2 contracts. It's a little income trade, high probability. I got a profit trap of 300 bucks, and that would be down to 40 bucks on this instrument, by the way. If we come down to $40, that's coming back to the August 5th low. So the probability profit is extremely high. I doubt this thing is coming down to $40. If it is, I will take the assignment. I'm okay with that. So I'm going to take this trade. Hopefully this is going to get filled at 55 cents or as close to it as possible. So let me throw this into my portfolio margin accounts. Let's go for 55 cents. So that's working. Let's see if I have to massage this thing down. I don't want to take less than 50 cents. 54. Now the mid price is 43, which I don't love. I could go up a strike. Let me try just 50 cents and see if it fills at 50. If it doesn't fill at 50, I'm going to move the strike. All right, I'm going to cancel that. Well, that was annoying. 45 by 44 by 41. Try that trade for. I was taking up more buying power, less profit. What the fudge? 42. That's okay. More buying power tied up. Profits about the same. About a 12% chance of assignment. If I did take any assignment, by the way, let me calculate that. That would be 42 minus 1 minus 50 cents. I'd own the shares at 40.50, which again, back at that August 5th bottom. All right, I'm going to try this one for 50 cents. Ugh. Really, dude? All right. Freaking A, man. I mean, SVXY I trade a lot when we have volatility plays. If we see a big spike in volatility to the upside, I usually buy SVXY. So I'll just treat it the same way. It's just not a good one for just like general options and income. So I'll keep an eye on it, but it's not working out today. No big deal. Let's keep going. Dollar index, big gap to the downside. I talked about this yesterday in some of the live sessions. We didn't have the DXY reflecting price like we did in the currency market. So we got a big gap to the downside. Oil prices have dropped a decent amount as well. If the oil is going to stay above the 200 moving average, that could be a potential support zone. So we're kind of eating back into this candle. Is this a support zone to hold oil steady? Yes, no, maybe. I don't know. I don't have a play on oil. I don't think oil's given a good sense of direction. We had a brief, little squeeze there because everyone was so bearish on oil, and it was a short squeeze. We did take out this recent high. This could be a rounded bottom. This could be like a head and shoulders type trade. I don't know, maybe. But higher oil means higher inflation, and I'm pretty sure if any country right now gives a crap about its economy, it's going to try to tame inflation hard. Bank of Japan this week has a rate decision, and I believe they are going to be raising rates this week on Thursday from like 11 p.m. to 2 a.m., where they typically have that big window for the Bank of Japan, their economic outlook. I believe they're raising rates by 25 basis points. Does that mean anything? No, it just means that I'm more interested in trading the Japanese yen futures or getting long FXY, which I might look at here in just a moment. USO dipped a little bit. Natural gas, which I'm long on. I'm still holding long UNG, trying to do a diagonal spread. Gold. All right, we are clearing these highs. That was our December high. That was our November high. Gold's looking pretty darn good. Is there anything on GC futures I could trade? Gosh, man, I would love to see a pull. I mean, we have a pretty healthy bar count on gold. This is my only hesitation on getting long gold. I mean, it's 318 bars. So do we have like I don't know. I've got to wait. I think this could run back to the same highs again. It builds like this. I've seen this happen in a lot of patterns. Builds like this, builds like this, builds like this. Eventually this catches up maybe at bear traps and then starts to go higher. That's wishful thinking, as opposed to I'm just going to get long and then chase this thing. I mean, look, gold is positioned to be bullish. I'm pretty bullish on gold overall. I just want a better price. So maybe GLD. Let me look at a trade here on GLD. See if I can get like a maybe a ratio spread, maybe a 1-1-1. Let me turn this into something. GLD. So I'm not sure what the options look like, but let's find out. If I go out to the end of the quarter, not awesome, but let's try 245 by 240 by 235. Do I love this? Not really. So buying power here to make 40 bucks. Obviously that's garbage. I want to pull back to get long a diagonal spread. It's not ready yet. A ratio spread, maybe, but then I get a willing to take on 100 shares, which isn't a terrible allocation. What would be a ratio spread that I'd be okay with? If I did the 240 by 235, what's my 200 moving average? 230. Okay. I mean, 230 to 235 wouldn't be awful. So if I did the 240 by 235, yuck. These premiums are terrible. Just not worth it, man. Like it's I could own it at 235. It'd be 234.50 if I took ownership, which is around that 200 moving average, which is fine. But man, I wish there was a better income trade. So I'm probably just going to hold off and keep the shares. I mean, right now, GLD is up around 9 grand. SLV is up around $5,500. So I'm just going to hang out and wait. I just don't like the levels to get in. I don't know. I think from this high, if we come up and retest the high, I know, look, I know there's a pretty solid bid on gold, whether it's just China or it's, BRICS or it's a lot of countries. I don't know. But I could see higher lows. I could see a resistance here, resistance here. I would love a pullback. If I can get one, I'd love a pullback to start looking to position for something out of the way and income driven, right? I mean, I have shares of GLD. I'm okay hanging on to those. I'm just not going to keep adding, more shares at or near the highs. I'd like a pullback. 318 bars is not nothing. I like scanning for, high bar counts just to see if we're going to kind of top out a little bit. That's how I was, looking at playing some plays on playing some plays. I was playing some trades on Nvidia when we hit like the 145 to 150 area. That's how I played MasterCard and Visa. I'm looking at, I was looking at Netflix to pull back a little bit. Speaking of Netflix, we have earnings today. So I'm going to look at pricing out something on Netflix. I've got some levels that I'd be interested in. I'm looking at about an $80 to $85 move on Netflix overall. We got some jostling today, down to $8.55, up to $8.69, about $14, $15 on the day. I do have some big levels towards 900 and some protective levels down into the 840 or lower. We'd have to have a beyond expected move on Netflix. So we're trading at 866 on the day. The week we have earnings today. Is Netflix able to do something? So average weekly ATR is $43. I'm looking at an average earnings move about 10%. So could I price in something that goes both directions and get paid either direction if I put on a trade for Friday? So let me take a quick look at Netflix. So Netflix for this Friday, we've got earnings after market today. Fudge, this will be a little bit tougher. So if I'm looking at about an $80 move with earnings, let me see what I can do. If I went like $50 out of the money, so 866. The issue is the highs are on 9. That's not bad then. I was gonna say the highs at 940. That's right around $80. Let me see what going like $50 in the money. So if I went up on the call side from 65 to, okay, so if I went up $50, let me go to like the 9. Try this one for 250. These are all 5. I have to go 5 wide. All right, I'll try the 910. If I buy the 910, it's $1.50 to make 350. Not bad. Okay, so that's up $50. And if I go down $50, 865 to 810 if I buy and sell. So let me see what this looks like. So $1.50 on the call side. So Netflix call would be $1.45 debit for a max of 350 to 355. And that is the 910 by 915. Okay, and then the put side, if I looked at the, get rid of these real quick. On the put side, if we went to the 8, 10, $1.28 to $1.55. So I can get $1.50 to $1.55. So how would that work? Well, if I lose on one trade and I lose $1.50 and I win on the other trade and win $3.50, I'd walk away with $2 profit. No chance of assignment here. It's just a debit spread, but that gives me something directionally neutral. I'm well within the expected move. This is already pricing, and this is interesting. Market makers here, $67 move on Netflix, and I'm pricing in about a $50 move one way or the other. Obviously, it's looking to be volatile. I might go out one more strike. So there's $1.35. So the 810 by 805 is $1.30 to $1.40. So a little bit cheaper on the debit spread. And if I get rid of that trade, let's try the other one. So it was a 910 by 915 for $1.45. If I go one strike higher, okay, I might try that one. So $1.37 if I go one strike higher. So basically the way the trade will work would be this. If we went to 915 by 920 bull call spread for $1.40. Okay. And then an 810, I guess I'll just put an X there, by 805 bear put spread for $1. We'll put $1.40. So the risk is this. My max risk is $2.80 debit, and price stays in the middle. That's my risk on the trade. Profit would be I win the call side or put side for, I've got $3.10 max profit, right? Because I'm $5 wide. Actually, I more than that. So I got $3.60 max profit. So if I lose $1.40, so win $3.60, lose $1.40, I net $2.20. As long as we're greater than, we're looking at 9.20, or we're less than 8.05. That makes sense? So that's one way to play this. We have room to get up to 9.40. We could have a big blowout move on Netflix and the market gets all excited. We could have a, terrible disappointment. We could drop all the way down to 7.60 if it's a huge disappointment. But, the market makers are looking at about a $70 move, and I'm pricing in about a $50 to $60 move. I've looked at the last 10 earnings prints, and we've had about a 10% average, which should put us around an $80 to $86 move. So is it a fair trade? Yeah, it's trading both directions. There's risk in the middle, but if we have a big move overnight and the market stays there, so the last time we had a big pop in earnings on Netflix, you can see it on the daily time frame. Last time we had a big pop in earnings was right here. So we were down, we were up. What was that gap? And there was some follow through, right? So we were down to 686, jumped all the way up to 637. That's a $50+ move on that day of follow through. We got all the way up from 686 to, that's an $80 move right there within earnings print. And then the day after we had some follow through. So it stayed there. So it'd be the same type of situation. Are we going to go higher or lower? And if we go higher, do we have some follow through to get up to like $80 of movement? If we go lower, do we have some follow through to get $80 of movement? If so, I can close that out for a nice little winner. Okay, so I'm going to take this trade on Netflix, and let me get this one priced out. So right now I'm looking at about $60 up on this trade, and that got more expensive on the debit. Are you freaking kidding me? So 915 by 920 and the 810 by 805. All right. So if I win $5 and I risk about $1.40 or $1.50, so I win. Max profit on one side would be about $3.50. $3.50. Take a loss of $1.50. I net $2 on the trade. Okay, I'm going to take this trade hopefully for $2.75 or less. So $2.70. Ooh, that's better. A little cheaper. A little cheaper. Okay. All right, I'm going to try to get this for $2.65. Okay, 270, 267. I'm going to try to get right at the mid price. Now it's mid price 272. Oh my gosh. 275. All right, I just got in for 275. All right. I'll I'll put this in Pulver Alerts. This will be an earnings play. So in my stock option side, this will be a new trade. Netflix 124 expiration. So I'm buying the 915 call, selling the 920 call, buying the 810 put, and selling the 805 put. Got in for 275 debit. Max credit would be $5 if Netflix is greater than 920 or less than 805 by 124 end of day. If this position shows, let's say, 375 credit or higher, I may look to protect profit. So I don't have to wait all the way to expiration on Friday. If this thing has a big blowout move to the upside and it's beyond expectations, and we get $100 out of a max 250 or 220, max is 225. If I'm up $100, I'll probably just take the profit. Okay. So Netflix earnings 121 after market. Market makers expecting $67 move. My earnings history shows about an $80 to $86 move. Okay, so that trade is in, and post this in Pulver Alerts. There we go. So I need this to get above, oops. Get out of here, Chrome. Nobody likes you. All right, so if we are, let me put my lines in the sand. I want to see if price will break above. Can we get above 920? Okay, so if we're above 920 or we are below 805, there. So if we're coming back and checking this at all this week and we are below 805 or we're above 920, there's profit to be had. So here, and I'll add to this. So I have the 915 by 920 bull call, 810 by 805 bear put, 275 debit, $5 max profit. That way I can post the screenshot. There we go. Okay. Trade incoming in 5 seconds. In. All right. Pulver Alerts posted. Little earnings plan Netflix for this Friday. I would like to take a look and see what else we have for earnings. Netflix is a big one this week. United, Abbott. I would want to take a look at some of these. Let's take a look at some of these healthcare ones. ABT. I do have some exposure in this stock, I believe. ABT. Yep. I think I bought it. I might have actually dumped the shares. If I still have it, let's find out. ABT. I bought some shares. Okay. So that's it. I just dollar cost average in for like $1,000. No worries. It's up. It's up something. I'm looking for ABT to be higher. We get back to all-time highs again or close to it. I don't mind this trade here. So if this is a swing higher, I mean, if this is going to symmetry, I'd be looking for maybe all-time highs here. We'll see. Nothing fancy, nothing crazy on that one. What else for earnings? Airlines, let's take a look. So we got United, Alaska, and American Airlines. So United Airlines is UAL. Look at that mofo. That is insane, man. I don't know how an airline did that. 200% in the course of what? since August of, I mean, since we had like that Labor Day sell-off, this thing just ripped. That is insane. Wow. I don't really know what to make of that outside of I would be almost willing to short this thing, but that could be a stupid play too. So let's see. UAL. It's done some pretty wild stuff. Is it possible on UAL? I mean, earnings can do whatever it wants. I'm seeing a pretty large level around 105. What would that be if I just put in a bear call spread right now? UAL. Go to the 24th. If I buy the 109, sell the 108, 48 cents to make 52 cents. It's not a bad trade. Issue is if we have a positive print, it goes up to like 115 or 120, that trade's toast. So I have a 120 level that I'd be watching closely. I've got the 105 level that I don't know. Was there earnings on it this morning? It was after market, I thought. Yeah, it's after market today. So I don't know. I don't love it. Let's go ABT. Let me bring out some. I'm going to bring out the heavy hitters here. So ABT. ABT, is it possible that we get to 113? Maybe. Expiration for Friday. I don't love that. Yeah, it's only a couple dollars away. I'd just stay out of that. Okay, what else? Johnson & Johnson. Earnings season is just getting underway. Johnson & Johnson. I would think this thing's got to be like a freaking cash cow. Could have some resistance in the 150 area, but if we have a decent move, yeah, I mean, it's just in a channel. I've got a 140 cash secured put on Johnson & Johnson. I've had that one for a while, and I've got it rolled out to this June. But yeah, we're just in this like pretty corrective channel. I don't know if we come back to COVID lows eventually, where I would say that's a no-brainer buy right there. We come back into COVID lows, and I'm just buying some shares of Johnson & Johnson. Otherwise, maybe this goes up and back down, and we just deal with that channel for a while. But I don't have an earnings play necessarily. No major outliers outside of this thing. Looks like it should be going higher, but I think there's better. Halliburton, maybe HAL. Halliburton is at 29.80. Stuck between a bunch of levels. Don't love that either. Discover. Should be like Discover Financial. So DFS. You got to be kidding me, man. These like consumer stocks are nuts. 189. What's the dealio? I mean, fighting momentum seems like a rough call. But man, if there's any direction to this play, and the earnings are Wednesday after close, I mean, we'd have to have basically counting on like a negative print. So I've got like a 170, 165. What's the expected move on DFS? DFS for this Friday, about an $8 move. That doesn't get me down to those levels at all. And who knows? Maybe they're like, yeah, everything looks good. People are paying their bills. Everyone likes credit cards. Also, credit cards still do well, even if we're facing a recession. It's like when people start tapping into their credit cards more and using more, credit card companies still do well until like all of a sudden there's delinquencies and people aren't paying their credit cards. That's a different story. But when credit card interest rates are like 25%, 28%, probably the worst debt you could possibly imagine having, but people are carrying it somehow. Anyway, only an $8 to $10 move. Let me see really quickly. If I go option slam, let me price one out. So DFS. Average moves about 6%. 7, 7, 8, 6, 8, 9, 10, 10, 7. Average is 6%. That's reasonable. I'd say that's reasonable. I think I can trade around that. So 0.06 times 189. That's a $10 to $11 move, man. Okay, let me see if I can price this one out. This one might be decent enough. First, before I get all ahead of myself, how many times do we at least get to 6% post earnings? That is the big question here. So if I went to next week, not this week, how many times do we get to at least 6%? We did not get it there. We did not get it there. We did not get it there. We did there. We did there. We did there. Did not. Did. Did. And did. Classic earnings fashion, 6 out of 10. Okay. It's usually not greater than 6, and it's typically not less than 4. Like earnings is still like super crazy coin flip. So the reason I was looking at this is like, okay, so if I price in something where it's like, can I at least get a 6% move? And a 6% move would be roughly $11, right? So it is possible that I could price in something relatively cheap, go out to next week, not this week, but let me see what this one actually looks like. So if I go to next week earnings on DFS and have some follow through, we got 250 spreads, which I don't love. But if I priced out like 10 apart, so we're at 190 right now. So if I buy the 197 by 200 and I buy the 180 by 177, so it cost me $67 to make $2.50. So that give me, for a $67 risk, I get $183. That's a good play in my opinion. I'm going to take this trade right here. I'm going both ways on earnings. Does price go somewhere by next Friday? And I need price to be either greater than, so either greater than 200 or less than 177.5. So if I can make $1, let's say $1, what? $1.80. So I make $1.80 to lose 70. I can walk away with $1.10 profit. So it's a fair play. It's not bad. Is there risk in the middle? Yeah, there's risk in the middle. So what's my max loss? This. My max loss would be the debit. Okay, so I don't mind this trade. IV rank at 45. Right outside the expected move. Do we have any open interest out there? Not a ton. I see this level here could be interesting. The 170 has a 1,000 open interest. Doesn't mean it's directional. It just means there's liquidity there. But to the upside, though, I don't see a lot of anything. So price-wise, I like it. Can I make it fair this way? If I just take it in a smidge, I go one strike, so 73 cents to make $1.80. Still, that's pretty good. That's only going up $7. And then this one here going down $7. About the same. Is this just not like a super liquid play? There's 67 cents. I don't know if I'm going to get filled on this trade. This seems crazy. I could do a bull call spread, $6 higher, essentially one strike, and then do okay. That one eats into my profits a little bit more. So I pay $1.60 to make a net 250. That's a little bit less profit than what I want. Crap. I'm gonna keep looking. I like it, but I just see no open interest, and therefore that means a little bit less liquidity than I want. So that might be a tough fill. I'm gonna keep an eye on this one though. I'm just gonna put in here: are we greater than 200 or less than 180? Just as a note. Are we greater than? There's another way to play this too. I'll take a look at this. So are we greater than 200 or are we less than 180? I want to take a look on that one. So that's kind of just a checkpoint. If we are, then we could have had a nice trade. The other play on this one would be that we're at 190. So I buy the 190. and I buy the 187. So I kind of split the difference here. Okay. If I want to make this a little bit cheaper, the broker's going to ask me to pay, basically $8 for what should be about $11 move. Okay. Now I can make this cheaper by selling, maybe 10 wide. If I go 192 to 202 or 187 to 177, I get nothing for that. So if I go 190 to 180, 190 to 200, so I could pay $6 to make $10. Probability is decent that we're going to get like a $10 to $11 move. That's what I forecasted here. About $11 is the expected move. That's 6 out of 10 times we're getting a move to that size. But you're paying like 70% of the premium. Is it cheaper to go one strike further? Not really. I pay another $1.20 to make an extra, $2.50 is good, but you're paying like 50% of that. All right, I just don't like it. I don't like it that much. Fudge it. I'm moving on. That's Discover. Anything else I highlighted? American Airlines, Alaska Airlines. American Airlines. I have some puts in this stock. I think they're expired and done. I went out to leaps. So I've got a June 2025 leap and a December to the end of the year. So right now, my American Airlines exposure, I'm already up $1,000, and I'll let that do its thing. The stock itself, a lot of the airlines, it has done pretty well. I would say, are we going back up to highs around $25? I didn't buy the shares. I certainly wish that I would have just bought the stupid shares. That'd be, that'd be up $8 a share. I didn't buy the shares. That was lame. now I'll wait. If we get a pullback on AAL, then maybe I'll buy a dip or do a diagonal spread, but I might just stay out. So that's AAL, Alaska Airlines. I'm not sure what their ticker is. Alaska Air Group is ALK. Another one, just like, where the hell did airlines just get crazy profitable? Up 100% in like 5 months. It's nuts, man. SkyWest, I do have some plays in. This one's still up $113. This is out to October of this year. Delta, can't stop, won't stop, also making a big run. But United had one of like the biggest runs. One of the biggest runs. Wow. All right. Anything else? Union Pacific, that's UNP. Just trade and chop suey here. I think freight is reasonable. Is there an income trade here? Let me check. Let's look at some IV on UNP. IV's at 45. Options, I would probably imagine, are not awesome. Anything under $200, maybe. Let me see. UNP, if I did we got earnings this week. If I did a ratio spread, let's go out to March. $200. Nope, it's just not good, man. Make 50 cents to risk, 20 grand if I'm going to own it. No thanks. No thanks. All right, earnings a little lame this week. Verizon, American Express, Next Era. Let's take one quick peek at those, and then I will wrap it up here. I'm trying to find some trades, but not liking the earnings stuff. I'd take the one on Netflix. That's fine. Discover was decent, but I just don't like the pricing. You got to go 250 wide. It's only looking at like a $10 move, $11 move. I think you're going to overpay that premium. The other one would be like the debit spreads. So Verizon. So we'll go Verizon AXP. So VZAXP and NEE. Okay, take a quick peek at those. So Verizon. If we have a high enough IV, this one might be a decent income play. IV is 63. Go out 60 to 80 days, perhaps. Premiums are just absolute atrocious. Gosh, man. I want if I'm going to take ownership, I want it at $31. I just don't. You get literally 0 cents credit on a $31 put. That's out 59 days. If I go out to April, this might be worth one trade for the year. It's still 0 bid. garbage. Now for an earnings play, let's see. Verizon. Let me check my liquidity levels for this week. I got a pretty decent move. I could see this going up towards $40, but it's trading at 39.30. It's like, what do I do with that? Let's find out. Verizon. This is on Friday, by the way. So probably the best thing to do on this one would not be buy a call now if I'm looking to go out for maybe a Thursday to Friday. If we're pulled back a little bit and we can get a rip up to $40, I might buy a Thursday to Friday expiration, and I might just wait. If I did a bull call spread, cost me 20 cents to make 30 cents. So if I did that trade, I risk 80 to make 120. But we've got to get to 40 this week. I want to see if we pull back. We pull back to 39. Maybe I can shift it down here for the same price and get a little bit more wiggle room. All right, I'll put that one on the to-do list. That might be a good trade this week. And then AXP is Amex. This thing's up to all-time highs again. It's crazy, man. We're running into a pretty big resistance point around 320. Earnings this week on AXP. Average move around 6% on a 318 stock. So about a $19 to $20 move. Is the options chain $1 wide? Nope, 250 wide. So you're looking at about a $19 move with 250 strikes. IV's not fantastic, but if I buy the 320, buy the 317, sell 20 wide, 317 to 97. So I'd pay $11 for a probability move of $19. Not awful. Now it's how many times do we actually get to the average move? So 6 and change, I mean, pretty consistently we get to at least 6%. Let's prove that with the last 10 earnings. So how many times do we get to 6%? Let's go out 8 days. So if we go to 6%, we got there day 8. I'm not going to count that one. Didn't get there. This one gets there after day 1. Okay. This one gets there. This one does not get there. This one gets there day 8. I'm not going to count that trade. Doesn't get there. Does get there. Doesn't get there. Doesn't get there. Yeah. So anything long vol on American Express, I don't love. It doesn't get to that 6% within usually like the 1 to 5 day window that I'm looking for. So probably going to stay out of that trade for right now. All right. I'm trying. I tried. Not really loving anything today. But we'll look at about a $20 move. So, 318 to 320 or 338, or 318 to about 300 to 298. So I just want to see if price is moving to the expected move. If it does or doesn't. If it stays in between there, then I'm glad I didn't go long. Or I mean, it's out of the way. I'm just looking to see, does it go up enough for me to make money? Does it go down enough for me to make money so I can trade it both directions? Right? Maybe, maybe not, but I don't love it. And then last one would be NEE, and then I'm going to wrap it up here. So NEE, 71.65 is the current price. This stock is down for the year, correct? I think NEE, that we looked at that through the sectors. This should be in, is this energy? No. Is this utilities? Yep. So yeah, for the year it is down, and then Constellation and Vistra up a ton. Okay, next era, let's take a look at it fundamentally. NEE. Dividend not well covered. Earnings forecasted to grow. Doesn't have a lot of upside. It's a utilities play, so it's not crazy awesome. Yeah, you're looking at like $6 upside. Not super exciting at all. Constellation's been performing way better. You know, having a 2 to 3% dividend doesn't make it that exciting either. I mean, I don't know. Is this a Head and Shoulders in the works? Right? Is this thing building up for some type of Head and Shoulders accumulation? Maybe. But all right, that's it. I'm going to take the trade on Netflix. Got some income trades in an SPY, QQQ. Price for today. We go back to the SPY. Things are still pretty darn quiet. So hanging in there today with a choppy day. We did not come back to fill the gap entirely. We're just very quiet on the day thus far. Look, just keep a heads up on this price action. If we end up making a kind of I don't know, that might be too aggressive. I'm looking to see how price. If price can't get above 60.50 on the SPX, be careful. You know, I still think this is potentially a bull trap. I don't know. You know, is this market going to be able to celebrate all-time highs sooner than later, or do we revisit lows or gap fills? We got a lot of gaps right now that are like pretty sizable. So that gap right there, that gap right there. If this structure like rolls over, I could see some gaps filling. I don't know what the catalyst is going to be. It doesn't matter. There's enough geopolitical stuff going on. You know, Trump could open his mouth and say something that the market doesn't like, and it prices in something wild. Who knows? But for right now, I mean, it's better than dealing with like a crazy bear correction at the moment. We've had a nice little pop to the upside since the 13th of January. Let's do a quick spot check. Gold, like I said, still up, which is totally fine. I just don't want to do anything. I'm glad that I'm long gold. I'm going to remain long gold. I'm looking to add to my positions, but just not yet. I'm not buying all-time highs. So I know that gold is up. It remains bid from all these central banks. That's fine. I could see this pattern in gold. Comes up, resistance, and this way. But this would be a spot where if there's any breakout, this is a bear trap in my opinion, and we look for the blowout top. That'd be the trade I'd look for. Otherwise, I'm still looking to see if we pull back to the 200 moving average. Silver, still looking to see if silver gets back to 32 and change. Bitcoin at 106. We did poke some fresh highs yesterday. And I mean, Bitcoin still remains a pretty good play. IBIT, I don't love averaging in more. I do have a collar on my position at 67. I'm going to look to roll. Let me see what that looks like right now, actually, before I go. So IBIT. And let's take a look. So if I were to look to roll, I have shares. I have my covered call at 67. I've got a protected put at 40. Could I roll this position? So it's out to March. Could I roll this up? So I don't have any expirations in between until March or May. Yikes. I definitely want to try to roll it up in price. So maybe the best way to do that, if I was going to roll it, would be roll my put down to maybe 35 and roll the call up. I mean, that's a 38 delta. Wow, that's still way up there. I'm just going to wait. If I get it called away, I'm just going to establish a new position on it. I think I'm just going to leave it as is. So my break-even trade, break-even's 35.10. If it gets called away at 67, it's not a bad play. 67 minus 35.10. I make 13 grand on IBIT, and I'll reestablish another position and put a collar on. So it's probably better for me just to stay put. If it doesn't get called away, so be it. I'll add another collar, but we'll see. So there's your run back up towards all-time highs. Is this a range trade? Maybe. You know, I know everyone's excited about this administration being pro-crypto, but do expect some volatility. If we have any risk off in the equities market, we're probably going to have some risk off in Bitcoin. But Bitcoin is what I'd rather trade. I don't want to be any part of some type of crypto bubble. You know, so if you're trading the Melania coin or Trump coin or fart coin, good luck. Godspeed. MicroStrategy still hanging in there. This one I don't mind rolling just because it's a nice. I mean, the premiums are ridiculous, and it's a good little sentiment play. Like if Bitcoin is maintaining bid, then MicroStrategy continues to do pretty well. So I think I'm rolled out to March on this one right now. Yep, up to 310. So that one's okay. Make a few bucks on that. Coinbase looking good for income as well. Anything else here? DAX has had a heck of a run. That's impressive, actually. I think a lot of this is also due to China. China's been looking better. So Mag 7, rotation out of Mag 7, right? Apple, big fat drop to the downside. Income trade at 210. I might be taking some shares of Apple. I'd own shares around 200 bucks. Wouldn't mind it. That'd be another, Apple had a terrible start in 2024. If it's down another 25%, that'd be wild and crazy. Is Mag 7 going to be like the worst basket to be in? I mean, Amazon's back up towards all-time highs. Google just poked all-time highs today, but faded. Meta, I still want to get a pullback. Microsoft, I really like Microsoft. I'm going to keep looking out to April, May. I'm going to look at that trade today, actually. I might post that for Pulver Alerts if I like it. Netflix, we got earnings. I'm going to take the earnings play. Otherwise, it's ratio spreads and income trades. NVIDIA, collared at 140 and 130. Tesla, put in some shares, got some dollar cost average positions, taking some income trades. I'm going to look at in April. Okay, so let's go. So this week is 121 to 124. Since we didn't have trading yesterday, I'm going to look at Mag 7 ratio spreads or income trades, and that would be Microsoft, Tesla, and possibly Netflix. Netflix is just a little expensive, but the other ones are okay. And then maybe Coinbase. Then another way to income trade IBIT. Berkshire Hathaway's responded really nicely. That's a ratio spread that's mostly in profit right now. Bond-wise, yield-wise, we are getting some follow through to the downside on the 10-year. So the US 10-year being down is a good sign. Does it stay there? I don't know. I hope that it does, for the sake of the consumer and the sake of housing and the most unaffordable market we've ever had in this country. But it's going to be important to see some follow through on the US 10-year. Bonds are still trying to find their groove, but they're off of recent lows. So that's a step at least in the right direction. We'll see. A lot of people calling for the 5 to 5.5% US 10-year. That's going to put a lot of strain in the market. I don't know, maybe that's too much bear, right? That's too much doom and gloom right now. If you're looking at 10-year going to 5.5, 6%, that's something's going to break. If we're coming back in these levels that we start to top out, perhaps we're topping out now. If we do and this goes lower, awesome, right? Maybe we can get some relief. I don't know if we're going to get back to these levels, which I'd be really excited about, but we'll find out. Dollar is the move from yesterday. We had big moves in Forex yesterday. The dollar index didn't reflect that, but it is today. So dollar's down today. Yep. So currency strength. So dollar's not dropping like a rock. It's already dropped yesterday. This is why the dollar's down. Dollar was down yesterday, but it wasn't shown in the DXY chart. Today, the dollar has been dropping, but it was stronger. I mean, this is interesting. Stronger dollar, stronger yen, stronger Swiss, but those are starting to fade a little bit. So we had a big move on dollar up, New Zealand down. That's CAD rather. So dollar up, CAD down. Where's my dollar CAD at, by the way? I already hit profit on that one. I'm just curious if it's going higher or lower. So my 44.80 got hit. Are you kidding me, man? Look at that nonsense. So I got spiked out on this first little rip. I mean, you talk about playing these noisy highs and lows. Like, that is what makes trading futures and Forex annoying. That is why I like to trade options. Now, I was on that trade to the upside until we hit that 44.80 point, which we've hit now 3 times. So once, twice, 3 times, lots of manipulation right there, but totally good if you're holding that long. Now it's over. I'm done. Is that a sign of a top? I don't know. I'm staying out of it for right now. I could care less what this dollar CAD does. Okay, but if the 10-year keeps dropping, the dollar index will probably go with it, or vice versa. If the dollar keeps dropping, US 10-year goes with it. I think for right now, that's a good sign for Q1. If Q1 gives us dollar weakness and US 10-year weakness, that would be awesome. That is going to be a positive flow for equities if that's the case. If this 10-year is sticky and continuing to stay bullish and higher lows and higher highs, it is going to be incredibly difficult for equities to go higher. But if we see 10-year dropping and dollar dropping, or dollar dropping, 10 years, I don't know which one's leading the race. But if they're both going together as correlated, then that's a good sign for equities to flow higher. Okay. All right. That being said, I'll let you go for today. I'm going to try to find some more earnings plays. Maybe for next week though. I didn't love these. You know, I looked at pretty much all of them. I don't have any major liquidity levels that I'm interested in. I'm trading Netflix right now, just because it's typically high open interest. It's liquid. It's a big mover. So I'm trying to price in a move where I can make some bucks, and then I will see what happens. Okay, I'll let you go. See you tomorrow. Thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.